List of the most powerful investor quotes. If you don't see a fool in the market, then it's probably you. Warren Buffett. Investing should be like watching paint dry or grass grow. If you want excitement, take and go to Las Vegas. Paul Samuelson. The market can remain irrational for much longer than you can remain solvent. John Maynard Keynes. If you find it hard to imagine that you could make a loss trading the financial markets, then you should not trade at all. John Bogle. Invest in yourself. Your career is the engine of your wealth. Paul Clitheroe. The most successful people are those who do what they love. Warren Buffett. How many millionaires do you know who became rich by investing in bank deposits? That's it. Robert Allen. Don't look for a needle in a haystack. Just buy the whole haystack. John Bogle. Know what you own and know why you own it. Peter Lynch. I think anything that makes people think they can actively trade stocks and do better than if they just sit in paper and do nothing is a terrible mistake. Warren Buffett. The intelligent investor is a realist who sells to optimists and buys to pessimists. Benjamin Graham. Invest for the long term. Just don't be too greedy and too skittish. Shelby Davis. Behind every share is a company. Find out how she's doing. Peter Lynch. The financial market is a device for redistributing money from impatient investors to patient ones. Warren Buffett. The best way to measure your investment success is not by outperforming the market, but by having a financial plan and behavioral discipline and sticking to it. These plan and discipline are most likely to get you where you want to go. Benjamin Graham. The ability to wait is important for an investor, but many people simply cannot stand waiting. If you cannot delay gratification, you will have to work very hard to overcome this deficiency. Charlie Munger. Many people with high IQs are terrible investors because they have terrible temperaments. It is necessary to keep unbridled, irrational emotions under control. Charlie Munger. Investors lose far more money trying to anticipate corrections than they do on the corrections themselves. Peter Lynch. The main problem of an investor, one might say, his worst enemy is himself. At the end of the day, how your investments behave is much less important than how you behave. Benjamin Graham. It's much better to buy a great company at a fair price than to buy an honest company at a great price. Warren Buffett. The biggest money is made in the stock market during downturns. People just don't understand it at times like this. Shelby Davis. An index fund essentially guarantees you superior returns. William Bernstein. If a person does not love his job, but works only for the money, then he is unlikely to be able to earn much. Charles Schwab. Those who once planted the tree sit today in its shade. Warren Buffett. Do more of what works and less of what doesn't. Dennis Gartman. It's okay if you were wrong, but it's unforgivable if you stay that way. Martin Zweig. History provides a key insight into market crises. They are inevitable, painful, but eventually overcome. Shelby Davis. The reason ETFs have been phenomenally successful is that they have solved many of the problems that investors have faced, namely transparency, liquidity, cost, and tax efficiency. Robert Capito. As Graham notes, uncontrolled optimism can turn into mania, and one of the main signs of mania is forgetting the lessons of history. Robert Haxter Ohm. The 4 most dangerous words in investing are, "It will be different this time." John Templeton. The value of a security is determined by the opinions of people. John Maynard Keynes with John Maynard Keynes. Investors should be skeptical of models of markets and stocks based on historical data. These models, built by different smart people who use terms that only the initiated understand, such as beta, gamma, sigma, and the like, they can make a big impression on you. However, quite often investors forget to understand the assumptions behind all these models. Beware of formula nerds. Warren Buffett. In the long run, we're all dead. John Maynard Keynes. The stock market has predicted 9 of the last 5 crises. Paul Samuelson. I will tell you how to become rich. Close the doors. Be afraid when others are greedy. Be greedy when others are afraid. Warren Buffett. Buy assets when blood flows and sell when bells ring. Nathan Rothschild. A bull market is born on pessimism, develops on skepticism, grows on optimism, and dies on euphoria. John Templeton. Invest in the company with the fewest color photographs in its annual report. Peter Lynch. I believe that those who sell shares and wait for a more opportune time to buy back the same shares rarely achieve their goal. They usually expect the decline to be greater than it actually appears. Philip Fisher. We don't need to be smarter than everyone else. We have to be more disciplined than others. Warren Buffett. Persist, don't choose no for an answer. If you are happy sitting in one place and not taking risks, you will remain sitting in that same place for the next years. David Rubenstein. It is the desire to objectively evaluate ourselves and others that most distinguishes people who use their potential from everyone else. Ray Dalio. The idea of hunches is key in investing and in business in general. You can't wait until the situation becomes obvious. It is necessary to think this is what others did under certain circumstances. Now, under new circumstances, we should understand what to do next. Edward Lampert. If you look at our last decisions, the results are pretty mediocre. There was no hyperactivity, but a sea of patience became visible. You should stick to your principles and capabilities, and when the chance comes, try to make the most of it. Charlie Munger. Understanding what not to pay attention to is just as important as understanding what to focus on. Warren Buffett. The individual investor must act consistently as an investor and inconsistently as a speculator. Benjamin Graham. For the vast majority of transactions, being stubborn about tiny fractional differences in price can be extremely costly. Philip Fisher. When you buy shares, ask yourself, would you buy the entire company? Ren Ricken. My main advice is don't lose money. Jim Ruters. The goal is to find the best companies in the world and invest in them, then find the worst companies in the world and go short on them. If the best do not outperform the worst, then you'd better try your hand at another business. Julian Robertson. A fund is not a magic wand, and it does not necessarily make a profit right away. An investor should always be prepared to wait for growth after a long period of losses. John Bogle. We are diversifying because we cannot predict the future. Paul Samuelson. Training doesn't produce perfect results, it produces consistent results. Warren Buffett. Invest in the kind of company that any fool would invest in precisely because sooner or later some fool will. Peter Lynch. The older I get, the better I can see where to go. If you're going to hunt elephants, don't go astray for rabbits. Thomas Boone Pickens.